Hello there.
Hello and welcome everybody. I'm the Gentleman Investor. Let's invest. In this episode, we're going to reveal who won the battle last week. We're going to take a look at our portfolios and we're going to pit two stocks against each other. Without further delay, let's get underway. Okay, so technically, as this is the first ever episode, two stocks didn't fight each other last week, and neither of them therefore won. So the winner this week has got to be investing. Sure, let's go with that, shall we? With that exciting reveal out the way, let's take a look at our portfolios. Okay, you caught me again. There's nothing in our portfolios, no action this week, but this is where we're going to track them each week. We're going to find out how they've done, and hopefully it'll be more exciting as time goes on. We'll take a look at the Battle Royale, the benchmark, the income generator, and see how they've compared to each other and the markets generally. We'll also be taking a deeper look at the payments coming out of the income generator. What's the next dividend going to be, and what are your projected winnings looking like? For example, here's what one share in our high dividend yield ETF looks like. These are the quarterly payments, and so every 6 months, you're going to get paid out the sum of 2. Let's keep investing, shall we? So finally, we've got something to talk about. This week's stock battle. Well, the theme is the most traded stocks. Let's get that out the way, shall we? We're going to pit Tesla against Nvidia. They are two of Trading 212's most traded stocks at the moment. So you know what they do, you know who they are. Let's pick one, shall we? Now, these two stocks aren't directly comparable, if any in fact are, but you know them well enough that I don't feel too bad comparing them side by side like this. We'll go through it pretty quickly. Tesla has a price of $216 compared to Nvidia's $119. Tesla has a PE ratio, or price to earnings ratio, of 50, which compares to Nvidia's of 98. Tesla has an earnings per share of $4.73, and Nvidia has $1.22. Another metric I like to look at is the gross margin. Tesla currently has a 5-year gross margin of 21.8%, whilst Nvidia has a gross margin of 67.68%. For those that need a little reminder, as I do, gross margin measures a company's gross profit compared to its revenues as a percentage, so it's a very good indicator of how much a company is actually making. And finally, Nvidia has the added advantage of having a dividend yield just newly started of 0.03. Not much, but a lovely indicator of what may come in future. And as we're all long-term investors, that is something very appealing. So what does that all mean? Well, it's a good question. For one thing, it means that neither of these are value stocks, that's for sure. Nvidia has a crazy multiple of almost 100, and even at half of that, Tesla is still incredibly punchy at 50. That being said, both of these companies have fantastic futures in my opinion, and despite the high valuations, there's likely still room for us to make a decent return over a long holding period. The demand for Nvidia is like nothing before, unlikely to fade away anytime soon, while the margin on cost is amazing. Tesla, on the other hand, has multiple products up its sleeve, like Optimus the robot, as well as its energy business. Of course, all of that potential growth for both companies has already been priced in, and they will need to keep meeting and exceeding expectations. But I don't see any reason why they can't. I would love to invest in both, but we can only pick one. So I'll let you make up your own minds and leave your vote in the comments. And of course, the stock with the most votes is the one that we will invest in. My choice, however, would be Tesla. Yes, it's a slight risk as the value is based on products that don't exist. That's fair. But the chance for upside is potentially even larger than Nvidia. The price point is okay, having been hovering at around the 200 mark for the best part of the year. And even if one of their future products, such as Optimus or Robotaxi, come to fruition, the stock valuation would likely exceed what has been priced in by some margin. Do you agree with me? Please let me know. Vote for your share in the comments! Thank you so much for watching, everyone. See you next week.
Goodbye.